All right, guys, bang, bang. I've got an awesome guest today. And Ian, thank you so much for taking the time to do this, man.
It's an honor to be here. I'm a big fan of yours, and just really an honor.
Yeah, well, listen, I always ask people for questions beforehand, and every once in a while, I am overwhelmed with how many people want to know information. And yesterday was one of those times. So let's not disappoint everyone. Feel like
Excellent.
no pressure. All right, so for the people who don't know you, let's just start off with background. Kind of, what did you do before you got into microcap stocks?
Well, it's a good question to start off. I mean, all I've been doing, honestly, since I was a sophomore in college has been microcap stocks. And there's a long version of this story, but I'll tell you the short one. When I was a sophomore in high school, my parents kind of sat me down, and said, we saved for you $20,000. Since you were a baby, this is going to be used for your college education. We want you to know now what you're getting, so you can choose where you want to apply yourself. Just know that this is all you're getting, and you can decide. And so at that point in time, that was 1997, so right in the heart of the internet technology bubble. They introduced me to their financial advisor, opened up an account, put that $20,000 in it. I started talking to him about small cap tech stocks. I got really engaged with the thought of that, just like everybody else at that environment. And just like that in that environment, you go through a dart at a bunch of technology companies and made 2 or 3x on your money really quickly. And that's what happened to me then. And so, I caught the greed bug, if you want to call it that, in high school. And then by the time to make a decision on college, I chose to go to a local university, one that was less expensive and one that I could kind of work full time as I went, so I could invest that money that I had grew up to that point into the stock market. So that's ultimately what I did. I ended up working for an Edward Jones financial advisor here locally. Was more or less a glorified receptionist there for many years, actually a few years, leading into the end of the technology bubble. And then when the technology bubble burst, I was also working there. And really, I learned a couple lessons there. Number one, that about 120,000 that I'd grown up to that point ultimately fell to about $8,000. So I learned some tough lessons with losing money, but also, I was more or less a receptionist at that financial advisor office. So I was the one taking phone calls from, the 1,000 clients that we had, and talking to them, and they were in, every emotional state that you can imagine. And at that point in time, I thought I was going to be a financial advisor, and going through that experience, I just said, this is the last thing I want to do. Investing is hard enough, just dealing with your own emotions, let alone the emotions of other people. And so really from that point forward, I got introduced to microcaps because some of those small cap tech names that fell down through the floor became microcaps. And also it kind of set me on my path of, okay, I don't want to be a financial advisor, but my goal from that point forward was to be a full-time private investor, just managing my own capital. And that was a goal I'd set out, my sophomore year in college, and, several years later achieved that. But really, my first entree into microcap was a company called XM Satellite Radio, which later merged with Sirius, which I'm sure many of you have in your cars. And when I was in college, I found out that company, which was a microcap back then, was presenting in New York City. And I had some fake business cards made from Cassel Capital. Talked to the conference organizer. They let me come up to New York. I took a bus, weaseled my way into a one-on-one meeting with the CEO at the time, Hugh Panera of XM Satellite Radio. Became enthralled with that story, and it was a story mainly back then. And back then, 40% of their shares were held short, so everybody was betting on that company going bankrupt. But ultimately, took that $8,000 I had left from the crash, put it all into XM at $1.78 per share, and this is 185% luck, but they all of a sudden started signing OEM agreements with Ford and GM. They refinanced their debt, and ultimately it was a huge short covering rally that propelled that stock from that $1.78 to 34 in about 14 months. And I tell that story, and very quickly on this forum, but I tell that story because that's what got me started in microcap, and it was really that ability to sit down with a management team face to face, and that's what kind of drew me into the space. And that was 2001, 2002. And from that point forward, just kind of learned the ropes of microcap investing by losing my money and making it back, and losing my money and making it back. And that's how you learn a lot of things. And that's what I did as well.
Absolutely. So before we kind of dig into some of the details here, right? I know there's a ton of people who are interested in public markets that are going to be listening to this, but for those that don't know what a microcap stock is, maybe just kind of give us some definition.
Sure. So if we're looking at all public equities in North America, there's approximately 20,000 stocks that trade in North America. So I'm combining, the US exchanges and also the Canadian exchanges. And if we're looking at microcap companies, let's define that as having market capitalizations less than 300 million. And of those 20,000 public equities in North America, approximately 50% or 10,000 of those companies are actually these small microcap companies that very few people have heard of. So that's kind of how I define the space, and I could define that down a little bit further in regards to my personal strategy, but that's kind of vaguely how you define it.
Okay. And then I've seen on some of the materials you guys have and website and stuff like that, that actually the smallest decile performs best. And so I think this is kind of what you're talking about with the story around XM and just kind of generally why people would be interested in these very small market cap stocks. So maybe talk a little bit just kind of historically, how has this performed against other types of public equities?
Sure. So again, there's 10,000 microcaps in North America under 300 million. And if you actually pull the CSRB data, you can actually get a member of Microcap Club pulled the data, and it was through I think 2016. But from 1927 to 2016, the smallest decile of the public markets, which was sub 114 million, outperformed all other market cap classes and by a wide margin. So the smallest decile, sub 114 million, outperform all the other deciles since 1927. And I think it's around 17% compounded compared to 12 and a half, which is the next highest decile. So the next highest decile is sub 500 million. So you really want to, or at least I have been focused since the start of my career on the smallest decile. And the reason for that is these companies are so small, are so illiquid that institutional capital can't invest in these small companies. And it's why I believe kind of the small microcap ecosystem is one of the best places for kind of small astute investor to get call it irrational returns, because you have this structural advantage to where larger, smarter money can't invest in these small companies until these companies execute and their stocks go up and their liquidity increases, and it allows those institutions to then take part in these equities. And so what happens is when you have a small company that executes, their stocks rise and you see these greater and greater waves of capital because institutional capital can flow into them at that point in time. And then to take it a step further, not only the smallest, but there's some white papers done by Roger Ibbotson called Liquidity as an Investment Style. So he analyzed illiquidity as a factor in regards to performance. And what he found, going back to, I believe, 1971, looking at around 3,500 public equities, was actually the best performing companies since 1971 were the illiquid microcap companies. And believe it or not, the worst performing area to be in was the liquid microcap companies. So best performing, illiquid microcap, worst performing, liquid microcap. And I think that one of the reasons there is, and I have some experience through investing through the 2008, 2009 crisis, is the larger microcap, the 150 to 300 million market cap area, the larger half, they're very institutionalized by that point in time. And usually when the market or the economy starts to teeter and these institutions want to take risk off, where their investors want to pull capital out of what is seen as a riskier equity, they pull it out of those funds, out of those indices, the Russell Microcap Index, and they usually get hammered really, really quickly. I mean, it's just a constant bid whacking, when the economy starts to suffer a little bit. And I think that's why actually, this history has shown that, liquid microcaps are some of the worst places to invest, but illiquid is the best.
Yeah, and so maybe help us understand when we're talking about a $300 to $500 million company, how liquid is liquid, right? When you talk about that, and then how illiquid is the illiquidity that you're talking about? Are we talking about literally hundreds of thousands of dollars in kind of daily volume when you're talking about illiquid, and tens of millions in the liquid side, or just kind of give us some milestones, if you will, in terms of how you think about that?
Sure. I think good way to think about it is, let me give you kind of an example of a typical kind of microcap that I would invest in. Let's say it's, not to name a name, but microcap XYZ. The stock is trading at $1.30 per share. Let's say it has a market cap of 50 million, 50. I would say on average that microcap might trade 20, 30,000 shares per day. So, that might be $40,000 of volume per day trading in that small microcap company. Also, there's zero analysts covering that. There's very little institutional ownership. A lot of times these companies are traded on the OTC markets, not on the NASDAQ or the NYSE. And so when you compare that to maybe a $500 million market cap company, there you might be looking at a $5 or $10 stock that might be trading, maybe a few $1,000,000 of volume per day, and they probably have 5 or 6 analysts covering them. Not nearly as much as something like a large cap, like let's say Target, which everybody knows, which probably trades around $115 per share, trades about $400 million of volume per day, has about 40 analysts covering it, 1,900 institutions that own it. So that kind of gives you kind of what I'm talking about, from illiquid microcap to liquid microcap to large cap, what it kind of looks like, the difference.
Got it. And so help me then understand what the process looks like. I think a lot of people understand, there's like the angel investing in all the private markets and venture capital, and that's pretty well documented. There's also kind of what I'll consider the both professional and retail, like large cap. You've got the hedge funds who kind of have a process that they're going through, and a lot of it's publicly available information, and they'll go do crazy stuff like, snapshots of the parking lot or try to get the oil levels and all that kind of stuff. And then you get Robinhood type traders, who basically are just letting it fly and not doing a lot of research. The micro cap space feels like it's actually a very process driven and very different than kind of the large cap space. So just help me understand, like, what does that process look like, and what are the differences to maybe what people are doing in the large cap space?
Sure. What's interesting about microcap is you have the same types of investors investing in these companies as you do in the large caps. And what I mean by that is, you'll find deep value investors investing down in these small microcaps. You'll find value investors, growth investors, life science investors, technology investors, mining, pretty much all those different areas of investing you will find down in microcap. It's just that these companies just tend to be smaller. And so everybody's process, because of that, is a little bit different from everybody else's. I would say the main difference is that, we're talking about 9, 10,000 microcaps in North America. There's still another metric, there's 10,000 microcaps, but there's still 7,000 of them under 100 million market cap. So a majority of them are the smaller ones, which is good. And I would say the main thing there is you have to do the work. That there's no analyst report to pull down and do research with. You're the one that has to actually do the work, do due diligence, read the filings, read the financials, communicate with management, all of these things. And so the process is different overall, but everybody's process is a little bit different. I don't use screens very much to find ideas, but some people do. If they're more kind of quantitative, to look at all stocks, under book value or something like that. But for the most part, how you find, or how I find ideas, I wish I could just point to one resource, but a lot of times it's just through brute force research, going through every microcap company, A through Z. I'm actually in the process of doing this in the UK on the London AIM exchange, looking at the microcaps on the AIM exchange in London, literally going through A through Z. And it's very tedious, but it's the only way you don't miss something. And a lot of times your edge in this business is your ability and willingness to kind of sift through a mountain of uninvestable ideas, trying to find that needle in a haystack. So brute force is a big area of how do you find these. Networking, just through the years of me doing this, I have personal relationships. I talk to people I talk to every week on the phone, people that invest similar to me, people that invest differently than me, just trying to see what people like. When I was starting in microcap, all the activity around these smaller microcaps was on public message boards like Raging Bull, Yahoo Finance, Investors Hub. And now that's kind of gravitated to Seeking Alpha and some private forums, just like microcapclub.com, which I founded. And so you can find valuable discussions there. You're just looking at PRs, filings. I do sometimes do screens. I don't find them very useful. Serendipity, just stumbling on an idea, just keeping your eyes and ears open. But those are primary areas to find ideas. You have to use all of those tactics to try to find these companies, and that's what we're trying to do here. I mean, I'm trying to find great companies early. I'm not a deep value investor. I don't have a willingness to want to buy something that's undervalued that will stay undervalued. I want to find something that's undervalued that can get overvalued. And that's primarily what I'm looking for. But that might be different from other people that are even successful, in the microcap arena. I know a lot of successful deep value investors, that have an incredible performance. So that's how I would find them. And then, when you go to analyzing the ideas, everybody kind of analyzes differently. Some people don't believe that management is important to talk to. Well, I take the other side of that, and I believe management is very important to talk to because, the smaller the company, the more important management becomes. A lot of times these CEOs aren't just the CEO, they're the chief marketing officer, they're taking the trash out, they make the coffee in the morning, they wear a lot of hats. And so you want to make sure that the person leading that company, is the right person. In addition to that, a lot of it, microcap gets a bad rap because of a lot of the headlines you'll read about microcaps, also known as penny stocks, is some of the bad stuff that happens. Yes, there's some fraudulent companies down in this arena. Yes, there's companies that probably shouldn't be public, but I would say there's probably far less as a percentage of the whole than when compared to private equity or venture capital.
And the information that's available to investors. So when you're analyzing this, does this look like you get your S1s and 10Ks and kind of all the traditional public filings that a large cap company would do? Or is there some different type of information that is available or not available?
For most of the microcaps, they file with the SEC. They have audited financials. If they don't, many of them, and I would say, let's call it 70%, 80% of microcaps, they're just like looking at Google, where they file their financials on sec.gov. You can look through them. You can find that information, and you can have some comfort in the fact that they are audited financials. Then there's also some other ones that don't file with the SEC, but they still file audited financials on otcmarkets.com. And then there's another level lower than that, which I try to tell people to stay away from. Those are companies that actually don't report anything. They're kind of the dark companies. And so I get asked a lot, if I want to get into this space, what should I focus on? And I tell people, if you want to really get rid of a lot of the risk, focus on the companies that are filing with the SEC, and focus on the companies that are actually making a profit. About 18% of all the microcaps are profitable. So you'll save yourself a lot of pain if you just focus on the profitable ones when you start.
Yeah. And to me, this feels like, and I've joked with people before, microcap investing is very similar to venture capital investing. It's just a different type of company has likely chosen to go the venture capital route versus the type of company that's chosen to get into the public markets early in its life cycle. And so how do you look at that difference or similarities between microcap investing, kind of, let's go to kind of lowest decile, so kind of sub 115 million, to maybe kind of Series A, Series B type venture capital investing?
Mm-hmm. Well, we could probably spend a whole podcast just talking about this, but maybe the first thing I'll say is, when you're looking at small companies, whether it's private equity, venture capital, and then there's small public companies. And everybody loves to glorify venture capital, everybody loves to glorify small private equity. Everybody likes to beat up on old microcap, as an investment class. And a lot of people forget that some of the best investors ever started here. Warren Buffett, Peter Lynch, Joel Greenblatt, they all started in these small microcap companies. It's just that their net worth grew, and they grew out of investing in this class. And the best companies ever, like Walmart, Netflix, Celgene, Intuitive Surgical, they were microcap companies. Berkshire Hathaway was even a microcap when Buffett took it over on an inflation-adjusted basis. The best performing companies ever started out of microcap. And so all these great investors, all these great companies, all these great returns came out of microcap, and yet I'm guessing that a lot of people never heard of them. And it's a shame, because the most powerful force, at least in public markets, is the discovery phase of a great business when it's small. and that's what we're looking at. And so, it's a big reason why I'm active on social media. It's not because I want to pull people into any of my brands, because a lot of what I do is capacity constrained. It's mainly just to keep the light shining on this space, Um, so when we look and compare them to kind of private equity, here it really changes geography based. Like here in the U.S., historically, and a lot of people don't talk about this either, Anthony. A lot of people talk about the decline in public companies, over the last 20 years. Well, a lot of that decline, I think, really started aggressively happening in 2010. And the reason for that is you had a lot of reverse mergers happening pre-2010. Then the China frauds occurred kind of 2010, 2011. And so that really cut down on the amount of reverse mergers that were happening. And so up until 2010, we averaged 800 reverse mergers a year. So 800 companies going public a year as microcaps. And yes, maybe 90% of them, went away or shouldn't have been public or whatever, but it's kind of the law of large numbers. A certain percentage of them would have graduated up into small cap, and became listed. And since 2010, that 800 a year went down to about 100. So, it's a really big fall off, and I think that's been impacting the public markets as well. And those companies, when they went public, I mean, you're talking about a company that had the ability to raise $1 million, $2 million, $3 million, and then just go public. You're not talking about $20 million, $30 million. You're talking about these small, raises. And really since 2010, kind of the microcap in the US has been kind of on a downdraft, I would say. But the opposite can be said in places like Canada and Australia, to where they still have very active microcap markets where they're going public, raising 5, 10 million, and going public because they don't have as robust of a venture capital or private equity scene as we do down here in the United States as well. And they're populist, meaning they're very resource centric in Australia and Canada. They're not as risk averse as we are down here. And it's hard to find a Canadian citizen that doesn't own a junior exploration company in Canada or something like that. And so it's a much more active scene in those two geographies compared to the US. I don't know if that helps answer your question.
No, it does. And how do you think about portfolio construction, right? So our mutual friend Adam Singer said to ensure that I ask you about kind of concentrated bets versus diversification. And he said you had kind of a lot of thoughts around, especially since you're investing in a sector of the market where you're not going to kind of get the 8% growth year over year, and really what you're looking for is a company that's small today, like you said, that can kind of grow into something much larger over time. So how do you think about diversification versus concentrated investments?
Well, kind of first when I talk about microcap, it's probably similar to how you would. I don't want to put words in your mouth, but it's probably how you would talk about Bitcoin for you, where it's like you're not telling people to go 100%, into. And it's kind of what I say with microcap. I'm a little bit of an oddball. This is all I know how to do, and so 95% of my assets are in microcap companies, and that sounds completely deranged to most people. But I tell other people, this is kind of something where you look at your portfolio and can you devote 5%, 3%, whatever percent to these small, growing, emerging companies, and I think that probably makes a lot of sense to most people, to get this appetite into their portfolio. As it relates to my portfolio construction, it's actually evolved quite a bit over the years. So, when I was building my capital in the early 2000s, so I went right from undergrad, graduated there 2003, went right to graduate school at Villanova till 2005, and then I worked for a small IR firm for 6 months, then started my own little firm, and basically I was just trying to cover my expenses until my portfolio grew to a size where I could just quit all of that and just manage my own portfolio full time. And that's what I did in 2008, in the depths of the crisis. But while I was doing that, while I was building that capital, I was in 3 or 4 companies. I was very super concentrated. And I was willing to take that type of risk, make those types of bets. And so it was not unusual to see 50% of my net worth in one company. And it's not something I advise other people to do, but it's just how I did it. And then as my portfolio has grown in size, I've become a little bit more diversified, but I'm still talking about a dozen equities, which again, most people would still say is insanely concentrated, but that seems very diversified to me. And usually what happens with my own portfolio today is, I'll usually take a position to 5%, 10% at cost, and then let it run. Where before I would probably take it up to 25 or 30% like right away. What I realized over the years is, it makes sense to buy a little bit, wait for these management teams to prove themselves, and then don't be afraid to average up. Some of my biggest winners over the years have been coming from averaging up into a good situation, not constantly averaging down in something that's disappointing you. And so that's a little bit how my portfolio has evolved. So today, I'll let something get up to maybe 30% of the portfolio, a single position, then I'll start shaving it back a little bit, 25, let it go to 30 again, shave it back to 25, that type of thing. And usually the ones that I keep at 5% to start that aren't exactly performing, I don't add to them very often. I want to let the companies that become larger in my portfolio have earned the right, and the companies that don't haven't. And that's kind of how I view my portfolio construction.
Yeah, it's really interesting because you're hitting on two key themes that I think everyone likes to talk about, but it's really hard to do, and people get nervous when forced to do it. But the first is concentration builds wealth and diversification protects it, right? And this is kind of tried and true over the years. Investors in all kinds of different sectors kind of all talk about that, which you just did. And then the second thing is this idea of the best investors are really pressing their winners, right? So it's kind of an average to good investor will make a small investment, it'll go up 3 times, 3x, and all of a sudden they're like, I hit a triple. But the best investor actually sees that and has conviction that, hey, this is going to go up 15 times or 20 times. And they'll start adding to the position, even though it's already gone up 3x, and kind of this averaging up and just really pressing into, hey, I was right. Right. And I think I'm going to continue to be right, and not being afraid to kind of pay up more for a company in the future as they've actually earned, kind of to your point, the right to have that new valuation on their path to, what could be higher gains.
Yeah, exactly. And especially, it depends on how you invest. Like I said, I'm trying to find companies a lot of times at the inflection point of profitability. And so, a 10 bagger in my world is something that is losing money, breaks even, and starts making money. And that can happen over a few quarters or a few years, but something that loses 10 cents a share to breaks even to earns 10 cents over a year or two, that's a 10x. And so the further back you go into that unprofitable camp, the more risk you have, and the smaller position I usually make it at the onset. And once that reaches profitability, and once they prove themselves more and they get to profitability, that's when you kind of have a place to really press your bet, if you will, or you just leave it. You don't devote more capital to it. You just let it alone now. You let it grow as a percentage of the portfolio, which is what I also do. But usually at the onset, I got lucky kind of early in my career when I was really building capital in a couple ideas where I pressed the bet hard out of the gate and I ended up being right. And that works when you're right, and it doesn't work when you're not right. And so now I kind of eased back a little bit, make a smaller investment, and I'm much more active to add to that position now.
How has the pandemic changed the way that you look at investing in this sector? Or maybe it hasn't changed anything at all, but like what's been kind of your experience over the last couple of months as the pandemic and then the economic recession?
In microcap, it's been a little bit bifurcated, where the microcaps that trade in the NASDAQ and the New York Stock Exchange, because the Russell indices have been ripping, they've been having that constant inflows coming into those equities. And so the listed microcaps have really done well, have really outperformed. And I'm finding a lot of the ones that are in the OTC, again, the ones that aren't institutionalized, that aren't in those indices, that aren't in a lot of microcap funds, haven't had those same tailwinds. So you can still kind of find value, if you will, down there. And so that's one of the dynamics I've been seeing, even in my portfolio today, which is probably 50-50 listed companies versus OTC. The OTC ones are definitely underperforming the ones that are listed right now. But kind of how my portfolio, what I generally look for is 4 main things when I look at a company. And this has evolved over the years, but I'm, even before COVID, I'm looking for a business that can grow through a recession. And so you immediately take 10,000 microcaps, just put that filter on it. It probably takes it down to 8% of that ecosystem. And then I'm looking for a balance sheet that can weather a storm, so it can act with occasional boldness, during a recessionary period. That takes, that 8% of the 10,000 companies down to probably 5 or 4%. And then you're looking for a stock that can conservatively double based off fundamental underpinnings over the 2 or 3 year time period. And then I'm looking for an organization that has what I believe is kind of that intelligent fanatic type leadership. And so those are kind of the 4 filters that I put on top of every new thing I look at. And just not that many companies fall out the bottom of that funnel. And that first one, a business that can grow through a recession, that gives you a lot of comfort, even in a COVID environment, that you're investing in these quality types of businesses or situations. And yeah, I mean, just like what we're seeing in large cap, a lot of them are tech centric, but that you're in these situations that can do well. And not only do well, they have a balance sheet to acquire a competitor or whatever the case may be. And so that's kind of how I look at what I'm looking for, in the microcaps I invest in.
So it would be obvious, I think, to a lot of people to say, why are investors not taking positions for small dollars and trying to take these companies private, right? They're so small. They're already somewhat illiquid. Is there a business in doing that? Have people tried that before? Has it not worked? Have you thought about it? Just talk to me about kind of this idea of you've got a small cap stock that wouldn't require nearly as much capital as, let's say, a very large cap stock, and kind of bringing them back into the private markets.
You definitely see that. I've probably been contacted a dozen times over the last 3 years from private equity firms that manage, 10 billion plus that want to do exactly that. Just like everything else, it's a lot harder than it looks. But you're seeing that. Let me give you an example. So at microcapclub.com, which is basically a membership site, people just talk about what ideas they like and why. We have 600 companies, microcap companies, that have been profiled by our members on there. And that kind of gets the discussion started, and people talk about them and follow them. And some of them aren't active threads. Some of them kind of go away, but a lot of them are active. Of those 600 companies since 2011 that have been profiled and discussed on Microcap Club, I think we're up to 92 of those companies have been acquired. So 92 of the 600. So that's a decent percentage of that. And not all of that's private equity. Some of that's just a private company buying a public company, and you're starting to see that, where you're seeing private company valuations get to a point where it's actually more prudent for them to buy a public small company in some of these cases. So we are seeing a lot of M&A activity, start to heat up, especially in the last couple of years, I would say.
Yeah. And I guess as you think about the microcap space, you are one of kind of the most vocal people about it. You obviously have this deep-seated belief. What would need to change in the market, with companies, maybe structurally on the economy, for you to basically throw your hands up and say, you know what, I had my run, this was great, but I'm going to go and focus on venture capital. I'm going to go focus on, large cap stocks, or just do something else other than microcap? Like what would kind of be that inflection point or that lever that you would just kind of throw your hands up and say, it's not worth my time. It'd be worth doing something better with my capital and energy.
I don't think I could ever see myself doing that, just because I'm not in 100 companies, and I don't need to find 15 companies a year. I'm in a dozen, and if I can find 1 or 2 good situations a year, that's all it takes. And I think it has become more important for an investor to not be landlocked to their geography. So, you're not just focusing on US microcaps, you're also focusing on Canadian, you're focusing on the UK, you're focusing on Australia. And I mentioned those 3 just because they're English speaking with similar accounting rules. It's becoming more important that you become more of a worldwide investor. And so I don't ever really see that happening. I mean, it's pretty bad here in the US, but I still find, a half a dozen ideas a year probably that fit those 4 filters I told you about, that are really good situations. So
I love that answer. What is the process you go through in terms of when you mentioned talking to the management teams is a key piece for you? What are you looking for? What are the questions you're asking? And kind of how does that differ than maybe, again, a venture capitalist or a large cap investor if they got to sit down with the CEO? Like what is specific to the micro cap sector in those conversations with management or CEOs?
I would say it's very similar to what VCs and private equity go through. I talk to Brent Beshore quite frequently about this. And I would say it's very similar to the types of conversations. The only kind of differences from those types of conversations when they're private versus small companies when they're public is you do want to get a sense for how they feel about dilution, how they would raise capital if they had to, because unlike those markets like private equity and venture capital, there's not a lot of good sources of capital for small public companies. A lot of the service providers that are in this arena, you know, they'll give you $2 million of capital, but they'll also dilute you 40%, and you know, it'll just it's such a, you know, there'll be covenant. It's just a bad situation for a lot of small companies. But so a lot of the conversations I have with management is just kind of seeing what their capital markets IQ is, and talking to them about that.
So a lot of people want to know your thoughts on Bitcoin, cryptocurrency, and then also in the precious metal space with both the actual assets themselves and then like gold miners. Maybe let's start with the gold and gold miners. Like, how do you look at precious metals? Then how do you look at maybe some of the micro cap stocks that are related to those precious metals?
Mm-hmm. In 2000, let's see, 5, 6, you know, I was heavily invested in kind of junior exploration mining precious metals companies. And so there was a good 2 or 3 year period of time where I was solely focused on this arena. And, you know, I probably got a little bit lucky during that time period as well. But, you know, I still invest in that area. And what I try to focus on are companies that actually have production of gold or precious metals, not just the ones that are exploring for them. You know, and so the ones that I'm invested in today they have actual gold mines. They're operating, and what you find over time is some of the biggest discoveries that have happened, you know, don't actually come from exploration companies. They come from people that are already mining, that are drilling out, that are, you know, that they're getting deeper underground in the mine, and they're just stumbling upon, you know, the next million ounces. It's not coming from somebody drilling 50 grid pattern holes through the surface, you know, in a small microcap company. So I mainly focus on producers because I think historically they have found the biggest kind of paydays on new resources. And I also try to find those that have an operator running the business that have had a history of success, that looks at mining and their business like a business, not just a promote or a stock to get up and raise more capital. So I'm really looking for business operators that look at their, you know, mining as a real business, not as somebody just running a promote for a stock.
Yeah, and I guess how do you kind of pull that out, right? Like what are the signals that you're looking for that can kind of highlight that? Because I think when you say it, like it makes sense.
Right.
Obviously, doing it is much harder. So, kind of, what's the process like, or what are you exactly looking for there?
You know, just like everything else, it just takes a lot of work to get to know the founder and the CEO of the company, to see who they really are. And it's just like any relationship, whether it's with your wife or, you know, or whatever. You know, it's hard to build that trust overnight just in a conversation or two. You know, and so a lot of my time is spent having conversations with a lot of CEOs to see who they truly are. You know, and I've been lucky enough with a few in the mining area that had previous successes. They, you know, took companies from very small to larger, and just got to know them well. And I continue to make those bets on those same individuals. But it just takes a lot of work to just kind of trying to see who somebody really is. I mean, a lot of it is just kind of common sense in a lot of ways. You know, I'm looking at somebody that's constantly telling me about the business, not constantly telling me about the stock.
And is it common for a micro cap CEO to do 2, 3, 4 different kind of endeavors throughout their career, or do you see most of these CEOs staying with one business for, you know, a decade or two?
You know, you see kind of serial entrepreneurs in microcap from time to time. A lot of times what you also see is somebody that started their microcap, you know, in the 1980s, and they're still running it today, and they shouldn't be, you know. So, you know, just because they've been around for a long time doesn't mean they should still be there. And it's probably a good spot for activism to take place. You know, but primarily, I do like to try to find people that have previous success. I'm not drawn to people that have big company success. You know, it doesn't impress me if they were the president at IBM, because, you know, it doesn't really help you when you run a small company on a shoestring budget. You know, I'm going to see entrepreneurial success.
Yeah, that makes sense. And then Bitcoin and cryptocurrencies. Have you done any work there? Kind of what are your thoughts in general about that entire space?
I know very little about it, to be honest with you, and I'm not ashamed to admit that. But I kind of view it like I do gold and silver, that has a slice of my portfolio, to where it probably does make sense to devote some, some fraction of your portfolio to something like this. But you would be much more better to talk to about this than me. I'm a big fan of not opening my mouth when I know what I'm going to say is going to make people dumber. So.
But I think I do find it interesting, right? Because one of the things that just talking to you is very obvious is like the things that you're looking at are innovative in nature. Because anytime that you've got something that is small in value today and you hope will grow to be much larger in value in the future, there has to be some level of innovation, right? And people will debate, what's more innovative than not, and kind of what's sustainable, what's not. But at the end of the day, like that's what you're really looking for. Is you're looking for who can go into a market and capture market share and,
Yep.
and kind of drive financials. And I think that crypto is very similar. Now, it probably has a much more binary bet to it, right? Or kind of outcome where it's either going to all be really, really valuable, and that's going to be, kind of the product of these like promises. It's going to be as big as the internet, and that type of perspective, or it's going to kind of be, kind of clean tech space in the mid 2000s, right? Where like they
Yeah.
had a bunch of excitement and then it kind of didn't really produce anything and people lost money. And so to me, it's like has a lot of the ingredients of the companies that you look at, but has a much more binary outcome. Like I'm not sure how many microcaps go to zero every year. I'm sure there's some, but
Mhm.
probably not nearly as many as, the altcoins at the bottom, 2000 that are all likely to go to zero, for example.
Yeah, I mean, probably maybe the better. It probably is somewhat like microcap, but it's probably more so like venture capital. Maybe in that to those extremes. Where 60% of the companies go to zero. I'm not sure what it is, but I think you're right. I think it's probably very similar. There might even be, I don't know how much crypto is out there now, but if there's 500, 1,000, more than that, but probably the numbers are probably even similar. And it's probably the same due diligence process too. Tom Shaughnessy has been beating me over the head about crypto and Bitcoin for so many years, and I was like, Tom, leave me alone. One of these days, I'm just going to have to find. I got to educate myself a little bit more on this, so I get on a podcast like this and not sound like an idiot. But but I think you're right.
Don't let Tom get in your ear, man. He'll get you.
Yeah.
I love it. When I ask people for questions, one of the most popular questions was just like, what was the best investment and what was the worst investment you've ever made? So maybe kind of give us some details there in terms of kind of both the process and then the outcomes on best and worst investment.
Sure. Um, One that, since we were talking about precious metals, one of the big winners I have was a company called Gold Resource Corporation, still trade today, and they went public in 2006 at an IPO at $1. So at $1 per share, probably a 25 million market cap company. And this was 2006, and they owned some property down in Mexico. They wanted to develop into a mine, and they just approached the business completely, I may say, just ass backwards from everybody else in mining. They said, we're not going to sit here and waste 10 years and $200 million drilling out a resource. We know this resource is there. We're going to drill out, enough to make a production decision. And we're going to get this thing into production in 5 years. And the industry just kind of laughed at them. They're like, okay, whatever, because it usually takes 20 years to get something into production. And so they, long story short, they pulled it off. By 2010, so 2006, 2010, they actually got into production. And their goal from the very beginning, their story, they went out and told the story from when they IPO'd was, we're going to do this by this date. Everybody said, yeah, right. And by the way, we're going to be a low cost producer. Our average cost is, $300 an ounce, let's say, on our gold that we produce. And how we're going to spend that cash flow is a third to taxes, a third to exploration, a third as a dividend. And if we get our production up to this rate, we think we can pay $1 per share dividend. And everybody's like, yeah, whatever, yeah, sure. Well, they made it into production by 2010, and I think it was by 2011, 2012, they hit $1 per share in a dividend. And that stock ultimately went from $1 to 30, in about 5 years, and they paid a massive dividend. And I sold too early. I think I sold out around 9, 10, something like that. And it still kicked me because I remember when they paid that $1 dividend, I'm like, I could have just got this dividend and just went on an island or something, but it was an incredible story. And then they had their ups and downs because the precious metals industry kind of had its ups and downs, but they're still around today. But that was a very fascinating story, and I just loved it because they approached the industry completely different. They were kind of mavericks in that regard, and they pulled it off.
It goes back to doing something different than everybody else. If you're right, usually ends up leading to incredible value creation. If you end up being wrong, though, you're just the idiot in the room, right?
Yeah,
And so
exactly.
it's
Yeah,
kind of what's the outcome is an important part.
exactly. And on the bad side, I think it was the investment I made right after that. And I don't know if if you see this in your career, Anthony, but a lot of times the worst decisions you make is right after a big win because you're in a gunslinging mood. You're like, yeah, I'll throw money at this or that and the other thing. And that was kind of one of these situations. So I ended up investing in a company right after that. Again, long story short, it ultimately was a fraud. Like they were cooking the books. And it was a company that had good fundamentals, actually had good financials, but I never quite understood why somebody would actually buy the product. But the numbers were going up and to the right every quarter, that they were reporting. And it ultimately, I woke up one morning, the stock was halted. The auditor couldn't find the cash that the company supposedly said they had. It opened back up 50% lower. I sold then, and then it ultimately went down to zero in about 2 months. And that was one of the biggest losses I took. And, I learned a couple valuable lessons there, mainly from not investing in companies that have products or services that you don't completely believe in.
Yeah. What other lessons did you learn from something like that? Because I think when people lose money, that's actually when they learn the most. So obvious in terms of what you just said, but what other lessons do you think you took away from it?
I think one of the other lessons, believe it or not, this might not be what you're looking for, but is that you're not going to be right all the time in this business. And you hear that a lot, but especially I find that a lot of people actually hurt their returns by trying to be perfect, by trying to find the perfect situation. But oftentimes the best opportunities are the situations that aren't perfect yet. And so you're trying to find these things that aren't squeaky clean quite yet. You're betting that they will be. And so one of the lessons was trying not to let that situation like that completely take away my courage to make another investment in something that's not perfect. So I continue to make choices, make investments into things where I know in the 12 companies that I hold, I'm going to be wrong on probably 5 or 6 of these. And so a lot of my time and attention is spent on the ones that I could be wrong on. Where am I going to be wrong on these? The winners are kind of easy. They execute, they put up the numbers, their stocks go up. But compounding money is about time, interest, and time, just being in these things for a long time. But the other side of that is making sure you don't lose money. So I want to keep my losses small, let my winners run, kind of the old Bill O'Neill quote.
And how do you think about selling positions, right? So you've got a concentrated portfolio. You obviously have high conviction when you put these positions on. What are the things you've learned over time, or maybe some processes you have in terms of being confident enough to say, look, I was wrong or something changed and I'm going to go ahead and cut this position? What does that look like for you?
Usually, so I have a system set up with every one of my investments where, each one of these companies, and this is probably where it's changed too, where I told you I was in 3 or 4 companies when I was kind of building capital, and I was on top of those companies. And what I realized just through maturing as an investor is I don't need to have my hands on top of all the variables in that company. There's probably 3 or 4 main ones, that I need to be attuned of that matter, for the long run. And so for each one of the companies I'm invested in, I know what those 2 or 3 variables are, and then I just put in safety nets everywhere to try to pick up on clues that the story might be changing. It might be just, using Google with keywords, or it might be, just tracking the conversations that I have with management, not that they're telling me anything that they shouldn't, but just the tone difference in a conversation. It's amazing just how you can just spot a tone difference in the conversation with a CEO that you've talked to 100 times before, and you're like, something's wrong here. It's not that he told me anything, just that I can tell the enthusiasm has changed. And I would say 50% of the stocks that I sold, were just because of one of those soft cues like that. And that's why it's hard to do this business and do what I do and invest how I do without having that kind of relationship, not with management, but just having that communication line. so you can have that, so you can see that. And again, not like they're telling you anything. It's just you get to know somebody and you can tell when something's different. And in all the times when I spotted or thought that something changed and I didn't sell, I should have sold. Like every time. And so usually when you start rationalizing owning a position is when you should sell immediately.
That's a pretty good piece of advice. Talk to me a little bit about microcapclub.com and then Intelligent Fanatics Capital Management. Like what are you guys doing with the capital management side, and then in terms of microcapclub.com?
Sure. So I became a full-time private investor in late 2008 and 2009. And I had my own blog at that point in time where I was talking about the handful of ideas that I liked. And quite honestly, it was just getting too much attention. I was in these small liquid equities. Every time I posted on something, it would, shoot the stock up, which is great for your ego, but it's just not a good long-term business thing to have. The powers that be don't like that type of, manipulation, if you want to call it that. And I just said, I don't like this. Let's shut it down. So I shut down my blog. But I really enjoyed talking about ideas, seeing what other people liked. And I saw what Value Investors Club was doing and a couple other websites were doing. And I said, why don't we just combine that and create a private community of like-minded, experienced microcap investors that is shielded from the public, that's private, where we can kind of just talk about what we like and why. And so launched that site in 2011. And I thought, hey, if nobody else joins this thing, it'll just be my own personal diary, whatever. It'll still be a good tool or resource for me. And it was mainly probably just me talking to myself for the first year. But over time, we attracted people into it. And, we have about 250 members now from across the world, about 40% from outside North America. And, we talk about stock or microcaps in not only the US, but Canada, Australia, the UK, kind of expanding out a little bit more and more every year. And it's just a great resource for finding ideas. It's not a website. So you can become a member, it's free. All you have to do is submit your favorite microcap idea, a 2-page investment thesis. The membership votes on the quality level of that investment thesis every month. If you get enough votes, you get in. If you don't, you don't. So we average 10 or 15 people that apply a month. Maybe 3 or 4 get in. And that's just how it's been. And then we're constantly pruning out members that don't participate. So we're always around this 200 to 250, but it's a very core group of folks, and it's a very active group. And then we also have the ability, if you don't have the time or the ability to actually produce an idea, you can just subscribe for $500 a year and get view-only access of these conversations that we're having. But where it's a little bit different is, this is not a guru service. This is not, oh, come look at Ian, he turned 10,000 to 7 million, look at me. It's not that at all. It's mainly, you want to see what a bunch of smart people in this space are looking at and why. That's why, you join a site like this as a subscriber.
Yeah, I love the idea of applying and having to meet a certain quality threshold voted on by the members, right? I mean, like there's no better kind of, insurance that, hey, the people who are joining this are going to be the people we want here, and also kind of fit the quality that we need to keep this valuable.
Yeah, and a lot of times, the cool thing about microcap is everybody's different. We have a lot of young investors. And, a lot of, because these are small companies, they're mainly found by retail. I say there's kind of a maturation of the investor base in an evolving company. It's like small retail, small institution, large institution, then dumb retail at the end. So we have a lot of younger investors, and, a lot of people, they might apply and they're a $200 billion fund manager. Another person might have $5,000 to their name, and we don't care. As long as you're smart and you find good things and you post good content, this is a place for you to be a member.
Yeah, I love that. And then on the capital management side?
Yeah, so, I can't say I'm a full-time private investor anymore, per se as that definition, but, basically I've always said no to managing other people's money for a lot of years, mainly because of that experience I had working for that financial advisor during the .com crash. I didn't feel like dealing with other people. You just say no year after year, and you say no just because you've always said no, and then you finally meet the right people that you said, okay, maybe this person can invest alongside me, and I don't know if it's just because I'm getting into my upper 30s now, but maybe there's more to life than me sitting in my corner office for the next 20 years by myself. Maybe I can help some other people, get access to this amazing ecosystem. And so that's where I kind of sat down and talked to my wife about it, and we decided, that it was a good time to, see if we could do this, kind of form a capital management firm and give people access to the smaller half of the microcap ecosystem, which there's very few intelligent ways to do that. You can buy the Russell Microcap Index, but the average market cap is a small cap, and they own 1,400 names. The worst way to own microcap is to own all of them. This is a stock pickers market, so, but the downside of this is it's capacity constrained. Like what I'm doing will never be a $200 million fund because there's just only, especially if I own a dozen companies that are averaging 50 million market cap, it just doesn't work. So, so we have this capital management firm where I manage, I don't know, maybe 30 or 40 other families, alongside my capital, but I'm not really bringing any new capital because it's a capacity constrained thing that I do. And I'd rather just grow their net worth with mine rather than just try to raise as much money as I can.
Yeah, and what's interesting to me is because of that capacity constraint, I'm assuming that there's families or LPs that you have where they would love to give you more money, but you probably can't take as much either. Like you're actually taking a smaller piece of somebody's net worth just because you have that capacity constraint, right?
Yeah, I mean, in fact, when I launched it, I actually had a maximum investment people could do, which nobody does that. So it's just like it was 100,000 minimum, 200,000 maximum. They're like, well, what if I want to give you $1 million? I'm like, no. Sorry. And a lot of that was due to, some of the people that are investing with me, I didn't know them very long, and so it was a way to protect the other investors. The first thing I do in this, when I talk to investors, just try to scare the crap out of them. They're like, this is volatile. If the market's down 40, I'm going to be down 50. Can you handle that? And if you can't, this isn't for you. And let them self-select back in, be like, if they call me back and be like, no, I want to hear more about this, I know I found the right investor. And so it's been a lot of time just trying to find the right investors to invest alongside me, because I don't want to go through a COVID-19 February and March and people calling up complaining about their stock portfolio being down. That's the time when you should be, adding to something. And because we had the right investors, that's what occurred.
I was going to say, what was the situation like in February, March this year?
It was actually really good. I was very pleased. I mean, probably a quarter of the people called up and said, all right, I'm ready to put more, I didn't have to initiate anything either, so we have a good core group of folks. And, it's just like in any asset management business. I mean, the investors themselves should always outperform the average because they should be buying when it's opportunistic to buy and add, and that's what I try to tell people out of the gate as well.
I love that. Before we wrap up, I always ask the same two questions to everybody. The first one is, what is the most important book that you've ever read?
I would say maybe there's a couple of them. The first is the Bible, and whether you believe in Jesus or not, I think it's just a great book on how to live a fulfilled life and a great life. And obviously, they talk about money and finances quite a bit, I think over 800 times. But I think it's just a great book for anybody to pick up and read and gain some valuable lessons. The second book was Think and Grow Rich by Napoleon Hill. It was a book I read when I was 16 years old that kind of got me on the path that I'm on today. When I was 16, I thought I was going to be kind of stuck managing my family's business at the time, which was not my passion in life. And it kind of gave me the courage to do something else. And so I talk about that book. And maybe a quick third book that probably people haven't read is a book called Free Capital by Guy Thomas. And it's a story of 12 private full-time investors who took their net worth from zero up to millions. And the reason why kind of this book impacted me is, I read it a few years after I became a full-time private investor. And it occurred to me, there's so few books written about full-time private investing. I mean, we read books quite honestly all the time about, people that build up huge amount of wealth, using the float of others, basically fund managers or asset managers. But I believe, honestly, that being a full-time private investor is probably the pinnacle of financial achievement, because you don't need anybody. Like, you don't need clients, you need customers. You can just do what you do. And I think that's an amazing thing to be able to achieve. And there's very few people I shouldn't say very few, but there's very few books devoted to it, because these types of full-time private investors that are even talked about in this book, they're private. They don't want people to know who they are. One of my mentors, when probably in the mid 2000s I met him, he was a gentleman that he worked a regular job, and he took his $200,000 401k in 1990, and he's a microcap investor. And I don't know, 2 years ago, it's probably worth 75 million, from 200,000, and it's strictly in a concentrated microcap, but you'd never know it. He still lives in a $400,000 house, still works the same job because he loves his job, and it's important to him when you talk to him. He's just like, my worst nightmare is people, my friends, my family actually know what I'm worth. They'll start looking at me differently. They'll start looking at me for what I have, not the relationships that we have. And so it's important that anonymity is important to him. And not only that, I think a lot of private full-time investors, they found a niche that they can exploit for a long time. There's no reason to arm wave and bring people to it. And so those two are kind of combination why kind of full-time private investing is sort of like this little thing that people talk about, but nobody wants to really talk about, unless it's anonymously. And so this book, talks about 12 of these people, and some of them are anonymous, some of them aren't. And the other thing I liked about this book is not everybody is investing the same way. There's commodities traders, there's short-term traders, there's investors, there's people doing different things. And I think that's a valuable lesson for everybody, listening to this. There's a lot of ways to get wealthy in this world. You don't need to invest like Buffett. You don't need to invest like Anthony or me. You can find your own path that really connects with who you are. And then that's when you just crush it, focus on it.
I love that story. It is the epitome, I think, of freedom too, right? Like you said.
Right.
So that's awesome. Second question is a little bit more fun one, and then you're going to get to ask me a question to end it. But aliens, believer or non-believer?
I don't know. I never even thought about that one before.
You've never thought about it?
Well, I've thought about it, but I've never thought about it deep enough to.
So I had a guy come on the podcast once.
Yeah.
His name's Bruce Fenton, and he said every human asks the same two questions at some point in their life. One, what happens after we die? And two, are we here alone or not?
Mm-hmm.
And so this really gets at kind of that second one, which is, is there other life, whether intelligent or not, elsewhere in the galaxy?
Right. It's hard to believe that there isn't, with how big the galaxy is. It's hard. But what type of life form that is, who knows? There's more and more UFO videos that are coming out from the airports that are being dropped by saying that they exist. So it's.
So you get to ask me one question to finish this up. What's the one question you have for me?
What do you want to be doing in 5 years?
That's an easy one. Doing the exact same thing I'm doing now. I'm having a blast.
That's awesome.
I always joke and I say, people will ask me like, how do you do all this stuff, whatever. And I say, it's because it's fun for me. Right. And there will be a day. And I get the sense that you're probably similar to me where like, I just wake up and I'm like, okay, this isn't fun. Like it's over. I'm not writing anymore. Right. I'm not recording videos. I'm not talking about crypto. Like just, it's over. And I want to go do something else. And I don't really know why that would happen or when that will happen, but you just get this sense of like, you could do something for 5, 10, 20, maybe 30 years. And then one day you just say, hey, I want to go do something else. But until that day comes, I just don't see myself doing anything else because I genuinely enjoy it. Right.
What's your North Star with kind of everything that you do? What's the thing that really just kind of drives you the most?
Just learning. I joke all the time. People who listen to podcasts have heard me talk about it a bunch, but this is like the most selfish thing I do. Right. And selfish because I get to talk to a bunch of smart people who educate me on stuff. Right. So you just gave me a masterclass on microcap stocks and I could have went and read online for, hours, but I probably learned more just now than I would have doing that. And so I think people genuinely appreciate the fact that like I record the conversations, I put them out, I'll write about them and kind of, create a bunch of content around it. But ultimately, like I'm learning. Right. And so once you kind of have a bunch of this, it helps inform my own investment decision making, right? So whether it's venture capital, it's more the crypto stuff. It just you're getting so many smart people telling you so much stuff that yeah, sure you throw some of it out, but there's a lot that sticks too, right? And you also are able to do pattern recognition, which to me, when you go to that kind of North Star of learning, that's actually probably what you learn the most. Right. Is like whether you talk to a micro cap investor, a large cap investor, a venture capitalist, whatever, like, hey, the team matters. Okay. Right. like, pretty elementary level type thing, but getting that reinforced by people who invest in all different aspects of a financial market, I think just kind of, hammers it home. And so I do look at it almost like an advantage, right? That I get kind of a diversity of people and experiences that I get to just ingest every day. So thank you.
Yeah. No. I mean, I think you do an amazing job, and I think the way you do it is really good, because I kind of think in one way you crush it in a lot of ways, but one way that I think it's kind of similar to what you and I do is, a lot of people, at least historically, probably have looked at Bitcoin and crypto, and at least the traditional financial folks be like, oh, that guy, or they're doing that. It's the same way people look at microcap or penny stocks. And you try to bring credibility to what you're doing by, first and foremost, just being intelligent in what you say and the people you bring onto your podcast and things like that. And it just brings, credibility to everything that you do, but credibility to, whether it's crypto or Bitcoin or microcap, these are asset classes that should have more people looking at them in an intelligent manner, So I think what you're doing is amazing.
And look, there's a balance, right? Like I always joke with people, I say like, hey, I want everyone to know about Bitcoin and understand it, but at the same time, like maybe just wait a couple of years before you guys all get smart on it, right? Because that's the opportunity. Right. Same thing with microcap, right? As if every investor in the world was looking at microcap, actually that would be a bad thing for you, right? Yeah. It'd be a much more efficient market.
Well, and it's unfortunate that the same rules apply too. Like right now, microcap is probably hitting its peak on awareness, just because there's a lot of small cap, microcap momentum plays, whether they're COVID plays, whether they're whatever it is, that are just making really stupid, going up 500, 1,000% in a few days to a few weeks, and so you get more attention when things are rising. And the same thing probably happened with what in your world, a couple years ago. It'll happen again. And it's unfortunate that more people will look at it, at probably the wrong time. But whatever. Overall, everything's going to go ebb and flow.
Absolutely. Where can we send people to learn more about you and Microcap Club or other things that you want them to go check out?
You can find me on Twitter. My handle is my name, Ian Cassel. You can go to microcapclub.com. That's a good resource for microcaps.
Awesome, man. Well, listen, thank you so much for taking the time to do this. Like I said, I learned a lot today. I hope everyone else did, and we'll have to do this again in the future.
Thanks. Bang, bang.